Welcome to Mark Putrino's Stock and Options Trading Research. We hope you're having a wonderful day. Get ready. Good morning. I'm Robin B. Ware, and that's Don Biden. And we're ready to go this morning. Mark, what do you got for us today, buddy?
Let's see. Hold on one second. Well, once again, the president doesn't know where the hell he is. Real good. Biden praises the Congressional Black Caucus, but problem is he was at the Hispanic Caucus. Let's see what this guy is doing with it. Really kind of embarrassing.
Really, it is. You know, and he didn't even, he shook the hand of the moderator the other day and didn't shake the Silva's hand from Brazil. He was pissed. He walked off the stage.
Yeah. Oh, God. So Hispanic Caucus, and he praises the Black Caucus. He didn't even know where he is, man. Oh, Jesus. I don't even know what to say, man. What a disgrace. All right, anyway, let's go on to more.
He's a racist dude, and he sees people of color that are all the same color to him. He don't care what color they are in reality or their culture. He's a racist son of a bitch. He always has been.
Yeah, there's no doubt about that. Remember when he said Obama was the first clean black guy in American politics?
Yeah.
Imagine if Trump said that, they'd be going after him to impeach him.
Oh, right. Well, and now we hired a liar.
Now you got this girl saying that Giuliani sexually accosted her. This is the same girl that said that Trump tried to steal the limo from the Secret Service. You know, so
she's
we're
special,
supposed to believe her. You know,
everybody in the world wants her.
That's unbelievable. All right, so let's just see what's going on here. Amazon's new challenge, bargain retailers. There's not really too much going on here. Let's see. Great. This tax break. Yeah, I don't really. So this is the I guess the union is going to increase their strike if they don't come to some kind of a deal today. But it's not really affecting the stocks. I mean, it's, to me, it's kind of surprising, frankly. But I guess maybe it's too soon to know. Let's see.
UAW be so unrealistic that they can't possibly think of doing it, right?
I mean, they're already causing other people to get laid off. So much about caring for the workers, right? It's like, oh, well, we only care about workers if they're union workers. So let's see here. He plans to reveal which additional plants the union will target for strikes on a Facebook live stream at 10 a.m. The walkouts would start at noon. I don't know. It's kind of, for a guy who works as much as I do, it's kind of hard to respect someone who's like, oh, I only want to work 4 days a week, and I want to get paid $150,000 a year. So I think we'll see a bounce in SPY day. I don't know, man. I think that with these interest rates situation, there's going to be limited upside. I mean, it's up a teeny bit, but the key now, what you got to do, JTI, is watch this. Will this 433 level here convert from support into resistance? And my suspicion is it probably will. The reason why I don't think we're going to get a bounce is because of what happens with what's going on with interest rates. You don't really hear people talk about it because they always talk about the wrong stuff. But this was a really big move yesterday. Where are we today? Yeah, so I mean, we're up to like 4.5% now. I mean, see that gap? This is what we've been talking about. How if we invert this, we actually see the chart of the bond, and it looks like the bond has just broken support. So you break support, you get a rapid move sometimes, and this is what happened here. So this is the opposite of the interest rates. This is the bonds. this is what really determines the daily interest rates. It's the trading. So you see these same things that we see in the stock market, like support here becomes resistance over here. All right. And it's because we're just looking at the emotions of humans that are trading the bonds as opposed to people that are trading the stocks. So this is a big move. I mean, this is like your classic breaking support, making a big move lower. So now the rates are the highest they've been in 15 years.
Mark, you got some questions in the chat. And congratulations, Sean. I'm glad you hit out yesterday on SPX.
You go, how do you invert it? You come over here and you right click and you hit invert scale.
Avi's got a good question for you.
Should we trade and not invest? I mean, I don't know. It depends on everyone's particular style. It's good for traders because it causes volatility. When we got like a rapid jump like this, should we not? I mean, in my personal opinion, I think the market's going to pretty much head lower. So I wouldn't. I mean, that's just me, and I've been wrong before, but I just think that with the rates going up this much, I think the market's going to go lower. All right, so let me see here.
I think you got everything, Mark. That Avi question was the main one.
Okay. All right, so let's go see. So again, let's go back to the S&P here. And pretty big move lower. Again, we got to watch. Is this going to convert here? So does this support become resistance? And if it does, then that's going to set the stage for the next move lower. Of course, there's always a chance we come rebounding back, but I just don't think that that's going to happen. The reason why is because of that was a big move in rates, and you don't really hear people talking about it. All right, so let's look at our technology sector. And this is not really coming back much. Oh, God, Verizon. All right, so this isn't really coming back much here. So we got to watch this level, was 163.50 level here. All right, I think the thing that's going to really tell us what to do in the tech sector is what goes on here with Apple. How does Apple navigate this 175 level? As you can see, that's right where we're trading this morning. So this goes back to like here. Okay, so this is March of last year, August of last year. And then it's been support for pretty much like the last month here. All right. So, but I mean, it looks weak, right? One of the things I'm looking at here is notice how we got the lower highs. So you got this high here. Let me get rid of this here. And then this high formed at a lower level. This high formed at a lower level. So lower highs, a lot of times when you get to support and you want to know is the support or get some insight into whether the support is going to break or not, you can just kind of see, oh, we got lower highs leading into it. A lot of times that means the support does break because what it's showing us is that the sellers are getting more aggressive. The buyers are hanging out down here, but the sellers are ready to accept lower prices. So this is probably like if there's one thing to really watch to see which way the market's going to go, I would say just how does Apple handle this level around 175? So this should be a fairly easy market to read. I mean, if Apple starts to break down and you start to see Apple's starts to trade below 175 and it looks like it's going to stay there, well, that would probably be a good sign that we're getting ready for another move lower. And because Apple is so big, that will bring the tech sector down, which will in turn bring a lot of other things down. And then I think if that starts to happen, there's some tech stocks that look like they got some room to go, like this AMD coming back a little bit this morning. But I mean, I could see this thing selling off all the way to down here, like down to there, right? So this could really move. So if the sector starts to move, what we do is you look within the sector for things that look like they're going to move the most. If we're looking at a sector ETF here, like XLK, what we're looking at is the aggregate of all the stocks that are in the sector. So just by definition, some are going to move by more and some are going to move by less. But anyway, we can see that we're right at support there. So let's take a look at NVIDIA. Yeah, now this looks kind of interesting here. All right, so it's trading up a little bit this morning, but this line level here, 406. So I would say keep an eye on this. If this breaks 406, I think the next stop is probably down around here, 375. And then if that breaks, then the next stop would be probably down around here, 317. So this could really come apart here. Well, Apple is right at 175. So you just got to watch how it acts around there. And the next stop would probably be 170. But if Apple breaks the support and goes to 170, that would make the whole market go lower. Then after that, I mean, who knows? 165 looks like it could kind of move. But the key now is like, see, if we go back here to last year, you can see that this level was important. So this is a really important level for Apple. This line is what is this line here? 174.20. So I guess I should change this. All right. So yeah. So I think sometimes the market's kind of easy to read, right? Sometimes it's hard to read. Sometimes it's easy to read. But when you get something like this, where you have Apple, which is by market weight 8% of the S&P 500, sitting right on an important level here, well, this makes it kind of easy because it's going to either rebound or it's going to break down. The odds are very slim that it's going to just stay around 175 for an extended period of time. What is the difference between the interest rates that the Fed puts out and the one you should? Well, when the Fed talks about rates, they're focusing on the federal funds rate. Federal, which is the overnight effective federal funds rate. So let's see this. No, that's not what we want to look at. Effective. I guess that's takes interest into account. Federal. All right. So is it this one? No, it's not that one either. Federal. Oops. I'm going to find this now. I'm determined. Federal funds.
Yeah, so Mark is looking for that. Y'all like and subscribe, share the stream with your friends, and thank you for sticking around with us. I'm glad you're learning.
This is kind of weird because I found the chart the other day. Anyway, what the Fed changes is the federal funds rate. It's not. They're not actually out in the bond market. Effective federal funds rate. I don't know why we can't find it here. Fed funds rate, effective federal funds rate, 30-day federal funds rate, Federal Reserve, blah, 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 blah. Anyway, they mess with the federal funds rate. And I don't know why we can't find a chart of it because I know they have it in here somewhere. But the 10-year rate that we just looked at is determined by the market. The Fed funds rate is determined by the Fed. And that is the rate that banks lend to each other at. So I don't know why we can't find it here. But anyway. Yeah, that's not it. Anyway, let's just see here. Federal funds rate chart. I just want to show you something. Federal funds rate chart. That's interest rates, Fed funds rate. So the federal funds rate chart, it looks like a staircase because, and that's not it either. This is the effective rate. Huh, weird. Anyway, yeah, so that's the difference. So the Fed funds rate is the rate that banks lend to each other at, and this is what the Fed messes with. Or actually, let me see. Is this the rate that the Fed lends at? Federal funds Great.
You did find it the other day though, because I remember you showing that to us. So it was an exact staircase.
All right. Yeah. So the Fed's funds rate is the rate that banks charge to other banks for when they're lending. So it's set by the Federal Market Committee or the Open Market Committee. So I just want to see if there's a chart because you can see it. It looks like a staircase because it really doesn't change until the Fed. I guess they don't have a chart of it. And it looks like a staircase. So that's what they mess with. The market is different. And now this is one of the problems actually is that a lot of people say, well, if they let the market determine the rate, as opposed to a bunch of people down there in Washington, then we wouldn't have these like periods of bubbles. And I mean, it's like every bubble in history, I think, has been caused because interest rates were held too low. They're artificially held too low. And that's what happened. That's why we got this inflation now. It's because the rates were artificially low. I mean, that's one of the reasons. Instead of letting the market set the rate, which is what they should do, probably, they try to manipulate the rates. And then we get these bubbles and we get bubbles and we get crashes. But you have the Federal Reserve sets the Fed funds rate. This is what banks are going to lend to overnight. If you're going to borrow from if one bank is borrowing from another bank, you're going to pay 5 point whatever percent it is. Whereas the bond market is determined by supply and demand, just like the stock market is, right? It's bonds go up because there's more demand than supply and vice versa. So that's why there's this like kind of a disconnect between the two. And a lot of people argue, and there might be something to it, that the Fed should just kind of stay out of the way and let the market set the rate. And I mean, like, because Greenspan held rates too low in the late 90s and early 2000s, we had the NASDAQ bubble, the commodities bubble, the housing bubble. So that's the story with that. All right, let's go look at our healthcare stocks. Kind of annoys me that I can't find that chart. All right, so here we got a pretty nasty sell-off in our healthcare. So we were down big, and notice how there's like no comeback this morning. So that is probably a little bit on the bearish side. Look at our financial sector here. One of my guinea pigs is they work out. They do laps around their little houses. Here.
Yeah.
he runs out of his house and he does a lap and then he runs in house, goes out the other way. So I had another guinea pig that his name was Whiskers. He died, but he used to work out as well. All right, so here we got this big sell-off. We got no rebound this morning. So this is what we would call bad action, right? Usually when you get a big sell-off, you get some kind of a rebound, and we're just not seeing it here. So I don't think there is going to be a bounce. And if there is, it'll probably be really small, and it probably won't be very tradable. But, I mean, I could be wrong. The market's always right. So if it looks like the S&P is going to get back up above this 433 level, there's a chance that it keeps going. But finance looks weak. The healthcare stocks look kind of weak. Let me just do this again here. Getting a little bit of a bounce here, but it's only 50 basis points. I don't know if that's really tradable. All right, we're going to go look at our consumer discretionary sector. Again, we had a really big sell-off here and only a little bit of a comeback this morning. So what do we want to look at here? Well, I would say now we probably want to just look at this level down. Actually, I'm going to put in a new line, like down right around like there, 161. So a couple points, but that would be an over a 1% move. So this looks kind of weak too. Yeah, I'm not really seeing things come back here. Industrials, right? Big move down and no bounce back at all. UPS was down. Let's see, UPS. While FedEx was up. Yeah, a lot of times they they trade it together. So what do we got down here? Yeah, so I mean, we're still. I don't think this trade would be triggered yet because we're still hanging out at that support right around this 156 level. So this is where we are in the pre-market, 155.92. So just kind of play the waiting game on this here. And of course, it could rebound as well. But a lot of times when we're looking for trades, we just find a bunch of things that look like they're set up. And if they're never triggered, then if the trade isn't triggered, then we don't go into it. So that kind of helps our win-loss ratio, right? We're not just buying it because it's down. We want to wait for it to tell us it's going to keep going down farther. So let's go. So that's a part of this sector here, the industrials, XLI. Yeah, so big move lower, but no rebound the next morning. That tells you something, right? Even though we made this big move down, the buyers are still kind of out of the way on the sidelines. All right, I think the consumer staples sector looks kind of interesting as well. But this had a big move lower and really no rebound here either. This thing looks to me like it could keep going. Consumer staples here. Yeah, I mean, I don't really see. We're trading right at this little bottom here, but there's only one day. It looks to me like this could kind of keep going as well. I mean, this looks kind of weak here. Yeah, there's some pretty big moves lower yesterday. Wow.
Yeah, it was a good day in the market if you're bearish.
Yeah. Well, I think it's this. I mean, it's just these interest rates are really kind of, and as we see, there's really inflation has really been kind of contained to energy, but eventually this will start spreading over into other things. So I think we're going to have another like big kind of wave of inflation coming through here. So let's look at our CRB index. And they just, the government just wants to keep spending money. And it's like, it's amazing to me how they have so little sense of economics that it's like, oh, gee, let's have the Inflation Reduction Act, which basically is just spending a lot of money on green energy. And that's an inflationary thing. And even Biden himself said he'd wish he didn't call it that. It's like, Jesus Christ. It's like, dude, it's like, you know what? It's the Seinfeld episode. Remember when George does everything the opposite of what he wants to do?
Yeah.
That's what Biden should do, man. Every time he thinks of doing something, he should just do the opposite. Right? It's like, I did not talk to my son at all about business dealings, even though we were, why don't you just say, yeah, I talked to my son about his business. So what? Most fathers do. And it's like, all right.
Yeah.
Instead of just telling a lie that's so easily demonstrable, it's just so. I guess it's just hubris, though. The guy's gotten away with this stuff for so long, he figures he can keep doing it.
Well, I mean, and honestly, all he had to do was win the seat. Now he gets to pardon whoever he wants. I mean, it's that simple. All they got to do is get Hunter arrested and booked and sentenced before the election, and then Hunter's good. Gets to go back to smoking crack and riding his Porsche around.
Yeah, he's it's almost like Hunter's got this like subconscious desire to ruin his father. How else could you leave? Why else would you record everything on a laptop and then forget it at the store? It's like, who knows, man? Maybe one day Hunter is on some crack bender and he spills he spills the beans. Does crack and drinks vodka for 10 days straight, or what did he say? He didn't sleep for 13 days. All right, what is Bill Ackman? Bill Ackman says you should short the long bond. So that means he's thinking that bonds are going to go lower, which means rates will go higher. So this guy is the head of Pershing Square, the good hedge fund, but let's see what he has to say. Critical information on the U.S. trading day. The hedge fund titan Bill Ackman, I believe that long-term rates will rise farther from here. As such, we should remain short bonds through the ownership of swaptions, which is like a swap, something that is pretty common in the big institutional world. A swap is really you just find someone on the other side of the trade and you say, hey, we think something's going to go up, you think it's going to go down. Let's make a deal, and if you're right, we pay you. If I'm right, you pay us. Anyway, that's so not surprising. that he thinks the rates are going to keep going up. I mean, look at what we're looking at. We've had this oil inflation, but we haven't really had any agricultural inflation. So, but now that's going to start, the higher oil prices is going to start spilling through to the agricultural things. And when those rise, then we could be in like kind of a full blown like inflation cycle again. Because we remember we looked at a bunch of these commodity ETFs, like corn's down, wheat's really kind of down, rice is down. But I suspect this is only temporary. And now that the costs of the energy are going to come through here, because guess what? You need oil to harvest crops. You need oil to bring things to the market. So we could be on the verge of another big inflationary thing. And I think that we probably are. And I don't think it's going to be good for the markets. So one thing to watch is this DBC ETF, right? Which a lot of the people that we know got into a couple of years ago. This is designed to track inflation. So just something to have on your radar screen here. If inflation really starts to pick up, this thing is going to go higher. This is an ETF, but it's designed to track a commodity index. So the commodity index is probably very similar to what we look at here, CRB. You can see there's similarities in the chart. So if commodities start moving higher, then this will start moving higher. Now, this is like behind the scenes, probably extremely complicated. Probably uses derivatives, futures, and options. But for the regular person, it just trades just like a regular stock or a regular ETF. So you just buy it and then you sell it, and that's it. You don't have to worry about the futures and the derivatives that's going on behind the scenes. But yeah, wheat, corn, you would think that with all the stuff that's going on over there in Ukraine, that these things would be up, but they're not. As a matter of fact, it looks like wheat has just broken support and could probably make another move lower. So I guess if you really want to be a commodities trader and you don't trade futures, you can look at this ETF here, WAT, Caricum Wheat Fund. Now, I would assume that this has options on it, but if wheat continues to break down, this will go down as well, right? So you can get exposure to a lot of different things in these ETFs, which I think is really a great thing. I mean, they didn't really even have a lot of these things until not too long ago. So we got soybeans. So you can trade this soybean fund, which is SOYB. This looks like it's about to make a move lower too. Yeah, these ETFs you can pretty much get exposure to anything these days. All right, let's see. The Fed's inflation read is dead wrong. That's why a 2024 downturn looms, says the professor who pioneered popular recession predictor. Sorry. All right, let's see who this is here. Campbell Harvey of Duke University. The Federal Reserve has achieved its goal of taming U.S. inflation, but refuses to say its rate hike cycle is complete. Well, I would disagree with what this guy's saying. Best known for developing the yield curve recession indicator, says the Fed's read on inflation is out of whack. As a result, the likelihood that the U.S. slips into recession is increasing. The big question is now the severity of the economic downturn to come. If the central bank continues unabated on its high interest rate path. Gosh, this is just so frustrating because these guys are just such idiots. You know, they should have just raised rates a long time ago.
It's all self-induced. This whole entire bloody painful thing has been self-induced on us.
Yeah, I would concur. I mean, the inflation from the late 70s was because of OPEC. Our inflation now is because of energy policy and overspending, which is really kind of, it's self-induced. That's why Elon Musk took over Twitter, because he knows how important free speech is. And if Twitter and Facebook and Google didn't censor all this stuff, guess what? We wouldn't have a war in Ukraine. We wouldn't have inflation. We wouldn't have famine in Afghanistan. But it's like, oh, everyone hates Trump so much that we got to make sure he doesn't get elected again.
Notice you don't hear anything about Afghanistan anymore.
We can't call COVID the China virus because it's racist, even though every other pandemic in the history of mankind has been named after where the thing came from. But now it's got to be different. It's just so frustrating. It's like, I live in Connecticut, right? Lyme disease comes from Lyme, Connecticut. SARS is something, something, something. SARS is like,
It's a
it's
respiratory
the initials.
something.
Well, it's the initials of where the thing came from. Back in 1973, we had the Wuhan flu, right? But now it's just like, oh, well, Trump said it's China, so whoa, we got to change it from that. We can't call it that. Oh, that's racist. You know what? Oh, it didn't come out of a lab. It came out of a cave, a bat. It's 100 miles away from where the wet market allegedly is. Gee, the name of the lab is the Institute for the Study of Coronaviruses. It's like Jon Stewart says. It says it right in the name. It's like, of course that's where it came from, but we're not allowed to say anything. All right, sorry about that little.
No, you're fine. Go on. Ran on them.
Little racist rant. It's just so. It's just
They've divided us,
we've become a country where no one knows anything about history. If you walked up to your typical high school student and you said to them, how many branches of the government are there and what are they? I wonder how many would be able to answer you.
Mark, I've watched them do it all the time on TV. There's kids on YouTube. These kids can't answer any kind of question about history because they've convoluted it. They're determining now which history to teach. I mean, what the hell is that? History is history. We should know it all.
Yeah.
We should know it all, the good, the bad, and the ugly.
Yeah. Yeah. They're talking about how, like I saw out in San Francisco, they're talking about giving reparations, right? And it's like, first of all, California never had slavery. So why should the Californian government be paying these people? And how about this? How about the fact that there were actually free blacks who owned slaves? Free blacks owned slaves. That is a scientific, historical fact. So do the descendants of those people have to pay reparations or do they get reparations? It's just a convoluted thing. I mean, if they taught real science in schools, like things like genetics, instead of things like transgender studies, then people would actually would learn about stuff, right? Like, what's the main reason to not be racist? Well, we all come from a common ancestor. They should teach that. They shouldn't teach like, George Washington owned slaves, so we got to take his name off of the school, right? But Tom Jefferson is the Democratic hero, so we don't mention the fact that he owned 250 slaves and he never released any of them except for the ones that he had with Sally Hemings, his girlfriend. But George Washington, upon his wife's death, he freed all his slaves. But no one mentions that because if it was now, Washington would be a Republican, right? So unfortunately, people are that shallow that it really comes down to that. But I say, read history. You shouldn't be able to graduate high school if you don't know basic things about our history. And it's pretty sad. It's even people in the government. They don't, this Ocasio-Cortez as just comes up with these historical facts that she makes up. But I don't think she makes them up. I think she really believes them. Like she said that the Republicans did something. So I forget exactly what she said, but she was like, the Republicans passed the thing so they could kick FDR out of office. So that's why now there's a constitutional amendment that you can't run for more than 2 terms. No one ran for more than 2 terms before FDR because it was out of respect to George Washington, because Washington was in there for 2 terms. But it was never a constitutional law. Then in World War II, FDR ran for the 3rd time and he was elected. So FDR actually died during the war. Okay. So it wasn't after the war, like Ocasio-Cortez says. He died during the war. And then after the war, that's when Congress unanimously passed the law that no one could run for office more than 2 times. So here's the thing about history, right? The sequence of events, it matters.
Absolutely.
It's like so and this woman is in Congress, but she's got some issues, man. People in her district really don't like her. in the New York Post, they were talking about how, she posted something where basically she's accusing corporations of causing inflation because she says like, oh, corporations set the prices.
Have a good day, Sean.
Well, just stick with us, Sean. Maybe one day you'll make enough money trading that you don't have to work at a dreaded job. But anyway, yeah, it's just sad. And if people read history, things we wouldn't have a lot of the problems that we have because history repeats itself. All right, let's see what else we got going on here. JP Morgan says there may be many oil crises this decade as it lifts rating on energy stocks. Huh. Let's take a look at JP Morgan stock. We haven't looked at that in a while. All right. Well, nothing really going on here, but you can just kind of see this is a really good example of our principles. I mean, look at this here, right? So we got resistance back here in March of 22. Then it becomes resistance in January of 23 through March of 23. Then resistance in May and in June. We rally, we sell off, and look at where we found support, like at that precise same level. So you don't need to be a former hedge fund trader to see that, right? I mean, look at that. It's like to within a point. Actually, let's even see. So the open in here trade was 143.37. And back here, we're at like 143.50. And we can see here too that this is a particular stock that really kind of likes its levels. I should write this down actually. Right, so we got clear support turns into clear resistance. Support becomes resistance. Support becomes resistance. This is a way to identify a bottom or a top, right? When a market's moving lower, there's a lot of buyer's remorse, and buyer's remorse causes support to turn into resistance. You got people who bought here who regret their decision when the market goes lower and they decide to sell. So if you have enough remorseful buyers placing sell orders, the support converts into resistance. So as we get down here, you'll notice that support here, so we support rally. So support here becomes resistance over here. But check this out. The support here and the bottom here became resistance, but then it wasn't resistance. So right here, we see this dynamic of what was support is not turning into resistance anymore. And that's the characteristic of a market that's at a bottom. So you look for the staircase, which you can kind of see here pretty clearly. And then when all of a sudden the staircase kind of breaks, that's a new analogy that I've just come up with here, then that tells us that the market is at a bottom. And now if it was reversed, when a market's moving higher, there's a lot of seller's remorse. So that makes resistance become support. When you get to the top of a market, the first time that what was resistance doesn't become support, that's like your warning sign. Now, if you think about it in your traditional head and shoulders pattern, that's what happens. You get that left shoulder, which is resistance. Then you get to the head. But then when the market goes lower, what was the left shoulder resistance does not become support. That tells us that we're probably at a top. So that's the essence of the head and shoulders pattern. Like, I don't think it's really that important to get too caught up with like the shape of it or the pattern. Like, what is, is this a head and shoulders? Is this not a head and shoulders? The important thing to see is that phenomena of what was resistance converting into support. Has that ended? And if that ended, then it's a good time that, or there's a good chance that the market's at a top. Well, I'll tell you, man, I'm pretty frustrated with Benzinga. I was supposed to get paid last Friday, and I still haven't been paid.
What?
So here we are a week later. I've asked them twice, and once we get off this call, I'm going to send Neil another message. But it's like, So anyway, if I don't get paid by Monday, I'm not showing up at class. So I'll just a little aside there, FYI.
Can't say I blame you.
But I'm in it to teach people. I don't give a rat's ass about You know, like I'm here for my students. I'm not here for them.
Well, you know something though, Mark. Most of these people that are following us are your students, and every one of these people, they've all learned from you.
Yeah.
They've all garnered something that is extremely valuable in their lives, and you've given that to them, man. So kudos to you. I'm gonna applaud you.
I don't understand why they don't utilize me more over there. You know, like they should have me teaching the technical analysis class. And but
Yeah, I've watched it. It's weird.
is it? Do you learn anything from it?
No,
Or
I haven't watched them. I've just watched them in my email box. They'll push everybody but you, and it doesn't make any sense.
yeah, yeah. All right. Well, whatever. Life goes on. But it's like, the problem is, it's like, now my wife's gonna be like, "Hey, did you get paid yet?" It's like, "Hey, did you get paid yet?" So I know the first thing, she's still sleeping, but the first thing she'll say this morning when I see her is like, "Oh, did you get paid yet?" You know,
Hey, listen, there's nothing wrong with a woman that takes care of her money.
Takes care of my money, right?
Right. Well, I
Yeah.
mean, that's it. I hand all my money to my wife. She's all right with it, though. She's good, man. She's good.
It's like, like my wife was going on, she works, and like a couple of days ago, she was like bitching. She's like, "I don't have any money," because, she's like, "I had to spend all my money on getting stuff for the girls to go off to school, and I'm not going to have any money until I get paid again." And then I'm just hanging out, and all of a sudden she comes home from the grocery store with all these groceries, and I'm like, "I thought you didn't have any money." And she's like, "I don't." And then she like pulls out my debit card and gives it to me. She's like, "Here." So anyway, whatever, it's you got to eat, I guess,
You
right?
got to eat. Luckily,
But
mine's the
it's
worst.
just the principle, man. It's like you don't mess with people's pay, It's like you just don't. It's just a principle. Um, I didn't get paid, and you guys made money on UPS. Hey, man, you got my address. You could always send me a little what's it called, like a tithe or
We can put you up
a
one of these fancy QR codes, Mark, and then you'll be able to. Let me show you. We can show one of you. Put
maybe we should have a
these
place
little
on the site where people
fancy
can donate.
QR codes so they can donate $5 to you or something.
Yeah, or maybe I could start a GoFundMe page. Right?
I guess, yeah. I mean, that's what Patreon is basically. These Patreon channels. That's basically what it is. Is a GoFundMe. People supporting the channel because they get something out of it.
Huh. All right. Well, something to think about. Donations. Hey, listen, who knows? Maybe we got someone out there who's really wealthy and makes a couple $1,000,000 on a trade, and it's like, all right, well, we could send you a couple $100,000. I would take it.
Boy, that would be a hell of a gift.
Yeah. Well, make sure you send cash because I don't want to have to pay taxes on it. All right. Let's see if anyone's got any questions. Let me know. If not, I'm going to hit the road and send a nasty email to certain people about my pay. And yeah, that's it. For those of you who are in the class today, I'm not going to start till 11:30 because on Fridays it's like no one shows up until 11:30 anyway. So it's like whatever.
Guys, we've got an exciting curriculum coming together. I mean, we have been working extremely hard on getting these lessons put together for you, and this is going to be pretty amazing once we launch. So we're looking at October 1st.
Yeah,
go ahead, Mark.
Here's the lessons I'm putting together on. I'm going to have 3 on levels. Like one is going to be on this, one's going to be on the remorse aspect, and then I'm going to have one on gaps and rapid moves. But I just want to really kind of put together, I guess these days people don't really write books anymore, but I just want to kind of put my philosophy out there, and then hopefully people will pay for us to will pay for the lessons or pay to whatever. Of course, it's going to be reasonable. I mean, we're not going to charge a lot, but
yeah, it's not going to be expensive. But you'll have the option just to buy them individual lessons. You can buy the PDFs. You can do any different way you want to help support Mark and us is greatly appreciated. And I think you're going to find some benefit from this. They're really good lessons. I've already picked up a couple of tips myself, and I've been with him every day for 3 years. So, this is going to be exciting, guys. I hope you enjoy it.
XLV might be breaking down. Yeah, well, when you have a big move and you don't get a rebound, it could kind of mean that the trend is going to continue. I mean, yeah, so look at that. So we had a big move lower, And this morning, there's no rebound whatsoever. So I would say the market overall looks pretty weak. I think we'll probably continue to head lower. Okay, everyone. Thanks so much, and have a good weekend. And we will see you all on Monday.
Thanks, guys. Have a great day.